Well, good afternoon. Happy Friday, November 20th. Mark Milam here, your mortgage professional, coming to you with this week's interest rate summary and market update. So, relatively good week for mortgage-backed securities for mortgage interest rates. We saw some slight improvement, just gradually ticking down as the week paced itself out. And we get to Friday and we get some interesting economic data today. So existing home sales beat expectations, coming in really hot at 6.85 million. That number's kind of meaningless without context. The expectation was 6.45 million. So a really incredible number coming in there for existing home sales, really reflecting what we all kind of know and intuit from the market, that it's a hot real estate market out there. If you're in the market to purchase a home, you're likely in a bidding war, and you're likely on your third or fourth bidding war trying to find the right house for you, one that you can get into. Contrary to that data, we get some weekly jobless claims also beating expectations. So some negative economic news. We had an estimate of 707,000 for weekly jobless claims. Those came in at 742. So joblessness still a problem in the country. Obviously, as we go into these colder weather months, the thing that's still impacting the entire country, including mortgage interest rates and the housing market, is the coronavirus. And as the infection rate continues to go up, we've seen deaths now eclipse 250,000, 250,000 deaths due to the coronavirus year to date, and we expect that number to get worse right as we move into December, the latter part of the year, and on into January. Until this vaccine is actually out and being administered to the populace, I think we can expect those deaths to keep going up. That's going to cause uncertainty in the market. It's going to cause worry, fear, concern in the market. Anytime that happens, money typically flows into bonds. Anytime bonds are receiving that kind of liquidity, that kind of injection, we're going to see interest rates stay low or go low. And we in the mortgage market are the beneficiaries, if you want to use that word, of exactly what's happening there. So record low interest rates as we go into this weekend for both the 30 and the 15-year fixed. We're also keeping a close eye on the conforming loan limit. So the Federal Housing Finance Agency is waiting for one report to drop. That's going to drop on Tuesday of next week. And then they're going to come out with their announcement of any change to the conforming loan limit. The conforming loan limit is just the line between a Fannie Mae Freddie Mac loan and a jumbo loan. And why is that important? Well, all of the best interest rates live in the conforming arena. So right now, that loan limit for most of the country is $510,400. Anything 510 or 400 on a first mortgage is a conforming conventional loan, or can be a conforming conventional loan. Anything over that is the world of jumbo. Now, the world of jumbo isn't bad. It's still really good interest rates. It's just not as good as that conforming conventional variety. That's where 80% of the mortgages are done in the United States. So we're going to keep a close eye on that Federal Housing Finance Agency announcement coming next week, right around Thanksgiving, to see where we wind up. Our hunch is, our suspicion is, based upon the increase of house prices, we've seen a 16% year over year in house prices. Based upon that kind of increase, we're expecting that new conforming loan limit to be somewhere in the neighborhood 545 to 555. That will be a huge deal for a lot of the population, as they'll now be able to avail themselves of the conforming loan interest rates, even though they would have been a jumbo loan prior. Also, we want to keep our eye on folks who had a 510 400 mortgage that closed in 2020. Now they're going to be able to potentially refinance, reset their escrow account, roll in any closing costs that they might need to roll in, and not worry about eclipsing the conforming loan limit to take advantage of these historically low rates. As always, if I can be of any service to you, please don't hesitate to email me, mark.milam@highlandmtg.com, Highland Mortgage, and 404-395-1102. Have a great weekend, everybody.